Great. I hope everyone had a chance to speak with the exhibitors over the lunch break and also do some extra networking following on from yesterday. So up next, we have a panel, The Future of Brokers, and some great panelists joining us. Vincent Turner from UNO, Susan Mitchell from Mortgage Choice, and Pete White from the FBAA. And looking forward to hearing an insightful panel and a discussion on the future of brokers. Thank you.
Thanks everyone for joining us for the Australian Mortgage Innovation Summit. So this panel today is looking at the future of brokers, and I'll be moderating this panel. So my name's Anna Shaw and I'm Head of Client Insights at RFI Group. And I've got a panel of experts on this topic of brokers with me today. So I'll let them introduce themselves, but just so you know who I've got with me today, we have Vincent Turner, who is the founder of UNO Home Loans. We've got Susan Mitchell, who is the CEO of Mortgage Choice, and Peter White, who is the Managing Director of the FBAA. So I might start with you, Vincent, to just introduce yourself and give a bit of background in terms of your organisation and why the future of brokers is an important topic to you.
Yeah, sure. Thank you for having me. So the founder of UNO, we would call ourselves an active home loan manager, and we operate as a broker. So we're certainly on the distribution side of the mortgage equation. But we've been distinguishing ourselves and differentiating ourselves by thinking about the whole life cycle of which you have debt, not just the moment where you get a loan. From research we did, understood that people are generally getting a pretty good deal when they get one, but tend to set and forget. And we found an opportunity to combine the services of a broker with technology to provide a more active management of that loan. So for us, the future of broking looks a lot like how do you help people not only get a good deal, but stay in a good deal.
Great, thanks for that. Susan?
Yes, hi, I'm Susan Mitchell, CEO of Mortgage Choice. Mortgage Choice was one of the very first mortgage brokers. We've been around for almost 30 years. We have a strong brand. We have been a consumer brand from day one. We're there to actually support the consumer through our franchise network to help our franchisees build bigger businesses, but to help those customers find the best home loan for them. We're a publicly listed company, so what we do is transparent to both the customer and our brokers. So we're looking forward to the next 30 years.
Thanks, Susan. And Peter?
Yeah, hi, Peter White here. I'm with the FBAA, which is one of the industry associations to finance and mortgage brokers. We've been going since about 1993, and I've been involved here since 2003. And we're there providing governance oversight and education and lobbying, both directly to politicians at a federal level and also dealing with the regulators as they're bringing through new pieces of legislation or regulations into the marketplace. We sit there as a trade association as such.
Great. Well, thanks everyone for that. I think as you'll all be able to see, we've got a good mix of perspectives today, and hopefully we'll have some really good discussion as we go through some of these questions. I think to start off with is sort of the topic that we just can't escape at the moment, looking at the impact of the pandemic of COVID. And I think particularly the last year and a half, pandemic aside, we had the bushfires to start the year last year, and then we had the beginning of COVID really starting to, feel the impacts in Australia, and that impact was seen in the mortgages space as well. And given that such a high proportion of people who have seen their income be affected by the pandemic, I'd like to ask the panel, how important do you think that brokers have been in supporting customers during this time? And what support do you think brokers can continue to offer during this time of financial uncertainty and stress? Susan, I might start with you.
Absolutely. I think there's a couple of important items as to what's happened over the past year. First of all, the first thing that a broker would have done is someone would have been concerned or upset. So they would have gone to their broker to be educated as to what is going on. So that's the first step. And just to calm their fears, let them understand what's going on and what their options are, and help them get to their bank to negotiate if they needed a break in their loan or what they needed. But there's a flip side to this, which is people being concerned that even though they haven't been hit by COVID yet, but that they would. And so they're looking around at their expenses, and the biggest expense that most people have is their mortgage. So what can I do to get my mortgage expense reduced? So there's a surge in refinancing over the last year where a lot of people spoke to their brokers or went directly to the bank to actually get their loan refinanced at historic low rates. some of the fixed rates, the lowest fixed rates right now are at about 1.85, 1.89. There's some great low rates. So it was a wonderful opportunity for people to, if they weren't directly affected by COVID immediately, but were concerned that they would, that they actually address their outgoing expenses.
Yeah, I think that low rate environment is also hard to escape as a topic, especially where it's just during a time of such uncertainty. I think there has been opportunity to really reduce that rate through that refinancing process. Vincent, in terms of your perspective, how do you think brokers can continue to support customers during this time?
Yeah, I think I'm just going to echo a little bit of what Susan was saying about that customers tend to what we observed is that they turn to their confidant, right? And if that was their broker or the bank, or whoever they had their relationship with respect to their mortgage, that was the first person who they, usually in shock, went, I don't know what's going to happen, you tell me. And we sort of observed people sitting in one of three buckets. There were those who were immediately affected and actually weren't going to be able to pay their mortgage. And they had to do something about that. And that information was changing incredibly quickly. And it was hard, I think, as a customer to know what to do. Then there was the customers who were potentially in what the bank started to deem these at-risk industries. Like, you may not have stopped working for the airline, but the airline was a bit of a concern and travel was a concern. So the bank started to say, well, we're not going to let you refinance, even though rates have suddenly dropped through the floor. And then you had people who were not in either of those categories who had a kind of a macro concern. And I think the role that the brokers played depended on which of those categories you fitted into. But I think what happened, which was really interesting and kind of exciting in some respects, and I think it's playing out with brokers now, is that the brokers who stepped up in that moment actually, in some respects, enlarged or redefined their relationship with the customer, which was, I'm not just here to get you a loan, I'm here to help you manage the relationship that you have with your mortgage, and that in the context of your finances. And I think we're going to see that kind of evolution of the broker more and more so. And it will, because when in uncertainty, obviously you turn to an expert, but there isn't any reason why a broker wouldn't be able to do that as part of a broader service offering and a deeper relationship with customers going forward. And I think that's what you're going to see more of.
Yeah, I like that point about the ongoing relationship, where if you've already got that good relationship with your broker, then it's your first port of call when you actually have that concern, rather than maybe getting in touch with your bank. And I think that's quite a valuable offering that brokers can particularly offer customers who are concerned about hardship or that type of thing as well.
Yeah, and look, you have to think that the information that you have, if you're dealing with it day to day, is that you not only know the information firsthand, but you understand the impact of that information. And a lot of the kind of customer can go to the website and go to the COVID-19 page and read the data, and that they get the info, but then they're like, what does that mean for me? And it's the job of someone who's thinking about it all the time to actually turn that into, here's what you should do about it or not.
Yeah, and I think that's when that tailored and proactive advice can be really helpful as well, when they kind of think, how does this affect me? And then they're actually getting that context as to how that relates to their specific financial situation.
Totally.
Peter, any thoughts on that question around the impact of COVID and that growing role and importance of the broker?
Yeah, and I agree with both Vincent and Susan in their comments. What we've certainly seen is the activity of brokers in supporting customers through the COVID period was absolutely astounding. What they did was second to none. We've had that many people reach out to us and say they haven't been that busy in 2 years. They were just out there, and it plays testament, especially when I look at regulatory and political conversation, as to why the remuneration structure that we have for brokers is a solid platform that we should continue on with, knowing there's a review coming up next year still. It enables brokers to be able to continue on their businesses, to be able to support clients, even if they're not necessarily generating an income out of that conversation. So with the hardship provisions that people might have been looking to understand further, or what was happening within their particular sector. But just being able to be there to help people through such extraordinarily difficult times. As you said, it started off with bushfires, and then there's some horrific rains up north after that, and then of course COVID hit. And it is I've been in the industry, I think this is now my 43rd year. I have never seen anything like this, regardless of GFCs or anything else that's gone on in the past. This was extraordinary, and brokers had just shone this brilliant light in the service that they provide to the customers, and why, in the majority of customers, the broker is that first point of contact. It's a relationship, but it's also there that they actually genuinely care about what their client or their borrower is going through. And most brokers work within a community or within a certain style of group, and they build these bonds and friendships, and they're there supporting the borrowers, and that's an enormous help, both not just with the loan, but also mentally with a person's mental health when they've got their backs against the wall through something that we've been through like this, knowing that there's someone there who will help.
Yeah, I think definitely considering that uncertainty as well. I think like Vincent touched on, you've got different segments of customers who have been more impacted financially, whereas others have seen impacts in other ways. And I think having that broker who you can actually turn to for that specific advice, I think is particularly valuable. In terms of financial hardship, I'd be interested to get some perspectives on what you've seen over the last 12 months in terms of customers being, in financial hardship, and what you've seen in terms of customers wanting to defer their loans and what that process has been like, as I imagine it's quite a different environment to what we've seen previously. Like you mentioned, Peter, you just haven't seen anything like this before. So I might start with you again. What are your thoughts on the growing levels of hardship and the level of deferrals that sort of peaked earlier in the year and then sort of went back to a bit more of a stable level?
Possibly something better answered by Vincent and Susan, but what we have seen, I guess, is that the amount of people that were on stimulus packages has greatly decreased. So that shows that people are trying and in many cases able to get back on their feet, back to the new normal, if I can put it that way, of getting their payments and speed up to date. I think Vincent and Susan probably got a better handle as to how they've seen their brokers managing the arrears. I would be fairly bullish to say that it's been really well handled with the intervention of brokers, but it's a difficult time, and I'm sure there's many different stories that can be told around the struggle with that hardship when things get tough. I might defer to my colleague.
Susan, after you.
Thank you. It's an interesting discussion because the hardship discussions may have started with a broker, but to be honest, the real hardship discussions were actually between the borrower and the bank. Sure. That's where the actual discussion needed to happen, and the broker was there to support them. I think the thing that Vincent called out in his really great, concise way of putting it, the three buckets of people, that bucket in the middle, that person that hadn't actually had a hardship yet, but felt that they were going to, and the support that they got from their broker, because it's very confusing as to who would have been able to help them and who would not have been able to help them, because they may have been in a COVID-related industry, but they weren't personally affected at that point, and it was really affecting their ability to prepare themselves financially for what might happen. And I think that's where the brokers really came to the fore, because those people would have been very, very frightened. Yeah. And they really needed someone to hold their hand. And so I think that was probably where they really came to the fore. On the group of people, that first bucket that Vincent put together really well, that was straight to the bank, that, to be honest, the brokers weren't really able to do much other than to point them to the correct place to the bank and sort of hold their hand a little bit. That had to happen between the borrower and the bank. So it's that middle group where I really feel that the brokers really came forward and stepped up and helped the people.
Yeah, no, I'd echo that a little bit as well. I think we certainly saw a lot of directing of traffic for that first bucket of people, and there's not a lot you can do other than say, hopefully they do it, and here's how to navigate it, and here's what you can ask for. Maybe here's how to frame it, and even how to manage it mentally, to Pete's point. I think we're still seeing customers who are coming in who would be better off financially if they were able to reprice their loan, but because of the industry that they're in, or because of the change in their business conditions, a lot of self-employed people, they're simply not able to refi their loan. And I've got a good example of this. It's a customer of ours who's also a friend of mine, and he's on a 4.5%, and he's a good customer. It's a low LVR loan at sub 70%. He should be somewhere in the twos, but his current lender won't renegotiate with him because they're like, why would we? We don't need to. And no one else will give him a loan because they're like, well, your trading history is good the last 6 months, so we're not going to, we're not comfortable to give you a loan yet. And so you've sort of got a bunch of people who've been orphaned. And I think whereas you can direct traffic for tier one and you can absolutely refi someone in that bucket 3, those ones in the middle absolutely still need advocacy that goes across brand. And I think that bucket hasn't gone away and it's going to persist for a little while yet.
I think that's a good point around customers' needs becoming more complex and more unique as well. And I think that's something that's always relevant, particularly when thinking about brokers, where you see, you know, the types of customers that aren't bad borrowers, you know, they don't necessarily have any issues. It's more so that just complexity with self-employment, or, you know, loss of income, or issues with employment stability because of something like the pandemic. And I think, I mean, this will probably tie in with a later section, but in terms of the growing role of the broker, do you think it's sort of, even now more than ever, the brokers will become particularly important, especially in servicing the needs of that customer group you just described, Vincent?
Yeah, I mean, I think the brokers have, you know, always had a really key role to play in, and by brokers I mean us as well, in helping people whose needs are not vanilla. And I think, I mean, there's probably some larger macros at play here in terms of people moving to more levels of self-employment or blended income where they're full-time, but they also have a part-time job. Maybe they drive for Uber on the weekends, or weird stuff like they've got a room that they put on Airbnb, and will a lender look at that? So I think the complexity is kind of like a state of entropy that's only getting worse in a lot of respects. And so the role of brokers to deal with that isn't going anywhere. I think the thing that is under threat from a broker perspective is that there is still a segment of loans that are relatively straightforward to do, and the evolution of the tooling that enables the customer to have visibility to what they might get elsewhere, and their ability to get a lot further down that funnel themselves, is something where a broker has to be really clear on what their value proposition is, other than filling out the form for a vanilla customer, because those customers will absolutely vote with their feet. And, you know, we operate quite digitally, so we attract a lot of people who are out, you know, rate hunting or rate chasing, whatever you want to call it. And you see the behavior. You see people come in, we can help them, we get them a great rate with a lender, and 6 months later, 12 months later, they're back out looking again. And if we're not proactively servicing their needs more broadly, or being the first to tell them that there's something better, they're out the back door. And I think that's something we're going to see in broking generally.
Susan, did you have any comments or thoughts on that?
I think Vincent's is spot on, that this is one of the things that brokers do. They help the complicated customer, and the reality is the customers are getting more and more complicated, and his vanilla stream is actually the prime target for the neobanks in any automated processing. And so we're going to wait and see how that all goes. But yes, I think he's pretty much covered it.
It's a nice segue to my next question, actually, where I wanted to ask a question about the neobanks and the current level of competition in the market. So I'd love some perspectives on how you feel about neobanks and their current offerings, and what makes them different to other providers in the market. Susan, I might take that back to you again.
It's a really great question to ask. It's a hard question to answer, because there's actually, the way it's talked about in the press, it sounds like there's this myriad of opportunities for neobanks, and actually there's really not. There's a couple that haven't really started lending yet. They may be neobanks, but they're actually not doing home loans. Then there's a couple that are doing home loans, but that's very, very limited. I can only really think of one or two. And then there's a couple that are doing commercial loans, which are great. So, and then you see one of the prime candidates that's been using broker very recently, 86400, that's just had a bid for it by NAB. So you now see that neobank actually being gobbled up by one of the major four. So I'll be honest with you, I feel like I'm excited for neobanks, because I think that's where we're going. But I'm just not quite sure it's really started in full flush of what I believe it will be over the next 5 to 10 years. I think it's a lot of press, and there's actually not a whole lot of honest activity there. So I'm more than happy to be corrected.
I'm going to hold fire for a second. I'm going to let Pete have a jump into that one before I maybe counter some of that perspective.
Yeah, very topical conversation at the time. Look, I am very pro the neobanks. It's very early days, and they've got a long road ahead of them. And as Susan pointed out, some of them aren't even lending at this stage, and some of them are only early entry into the ADI space as well. So there's a lot of growth in front of us. But I see this as almost, if you like, a lot of forward planning. I believe very much so this is the future. and it's still got a journey in front of it. It's a long journey, so it's a long play for all of them. But I think it provides a very valuable piece into our marketplace, whether it be in the deposit taking side or the lending side. And I think if they are going to call them themselves neobanks, then they need to have a gamut of products, both debt and depository wise, and not just be one. And my understanding is that they're all working towards that at various speeds. So I actually hope they all do very, very well as much as they can, especially, and as Susan said about the ones that are in the business or commercial lending side, I think is really, really great. Home loan side is still growing, and the future of 86400 as one of the entrants who are now under the NABU Bank potential takeover for various reasons is one to see what happens. And I just hope, regardless of how their journeys play out, they don't lose who they are. I get feedback on some really great reports on some in the space, and I'd hate to see that change because of the journey that they go on, to whatever that may be and for whoever that may be. But I kind of, I'm seriously excited about that space, and I think it's yet to realise itself, but it will come.
I definitely agree on that last point, that it's not fully realised, which I think both of you sort of indicate. But I think the neobanks is kind of a misnomer for what the threat / opportunity is in mortgages, which is neo lenders. It's these new lenders to market who are kind of typified by being pretty lean in how they run their operations, and they're pretty clear that they're focused on the assessment of a client, the fulfillment of a client. They're not necessarily that interested in the servicing, but I think that'll come later. And there's some really good examples in the US where student lenders who controlled the entire experience, including acquisition, fulfillment and servicing, actually had longer term relationships and end up building a lot deeper relationships with a client. And it meant that they could forego mortgage margin to build a 3 or 4 product, all debt related products. So SoFi is probably a really good example of this in the US. And so I think what we're starting to see in Australia is the emergence of these lenders who are very clearly targeting a narrow segment of the market. The vanilla stuff is narrow when you think about it, right? It might be 10 or 15% of the market where customers are literally just walk in super easy. The LVRs are fine, security's fine, the credit's fine, the income's fine. And if one of those things is wrong, it's much harder for the neos to play, this being neo lenders generally. But I think there's a couple of things that are really interesting in what's happening here, is that over time, the algorithms are going to get better for sure. Over time, their scale is going to give them funding advantages, which means that they're going to have more ability to push down on the margins for sure. And the thing we've absolutely observed is that other than 86400, they're not dealing with brokers, and they're doing that because they're worried about margin. And I think that's disruptive to the current broker paradigm. But over time, they're going to cap out. They're going to cap out as to just how much they can get from a comparison site. And they're going to need to work out how to embrace the channel that 65% of Australians are using. And I think what that will mean is probably 2 things that are already starting to play out. One, they'll look for different commercial models from the brokers, and those models might be weighted differently, or they might just be skinnier to begin with. And 2, and this is already happening with 86400, they will change the way that the process works so that they can take cost out of their own system. To give you the really good example with 86400, the broker is responsible for engaging the customer and recommending what the customer should do from all of these brands and saying, we're going to put you with 86400. But the relationship from recommendation to application actually involves the customer doing a lot of work directly with the bank, which means that they can invest in one channel for getting applications and send brokers into the same channel as retail. And a lot of the challenges that brokers are experiencing with the large brands at the moment is because third party is often orphaned in the development cycle at these major banks. And I think if you play that forward, you might see 4 or 5 big neo brands, if you like, who are dealing with brokers under a different commercial model with a slightly different operating model that actually benefits the cost on both the broker and the lender side. That was a lot.
No, that was
A
really
fantastic answer.
I've thought about this for a fair bit. It's probably an indictment on my personal life.
And this is why it's good to have such a good mix of perspectives as well. That sort of links with my next question when thinking about, so we've got these new entrants that are offering a really streamlined digital experience, and we've got existing lenders in the market. And RFI Group data shows that broker originated customers are typically more satisfied with their broker than they are with their lender. And part of that could be because they have this really great experience with their broker. It's very personalized, it's very one-on-one, and then they get finally put with that lender and it's not the same experience. So this is something that we haven't seen changing in the market in our research in the last couple of years. So what do you think lenders and brokers need to be doing to be almost working together to ensure customers are satisfied with kind of that whole application experience, and like we spoke about earlier, that ongoing maintenance of the product as well? Because I think that's part of it. You know, is it easy to manage my loan? What's this like? Susan, I might start with you, just thinking about that question on collaboration.
I don't know about the collaboration part. I would say the most important thing, it's quite noticeable that the good customer experience working into a good lender experience is coming from the combination of a good broker and an institution that has invested in their IT. So when I actually see the investment in IT and the ongoing investment in IT and the ongoing investment in how you onboard these customers, the experience is spectacular for everybody. And it's fast, it's efficient, it's cost effective for the broker and for the bank, and therefore should flow through to the customer. So that would be, to me, the biggest thing that needs to happen. And that may come through some collaboration in how those systems work. But I think the real decision needs to come at the executive level in some of these institutions, that they need to invest in the IT channel that relates to a huge way in which they're getting new customers, rather than focusing their IT investment on maybe their branches or their sales force. They need to understand that they're getting a large proportion of their new customers through their broker channel, and they need to do something to ensure that those customers are excited about joining that institution. So I think a lot of that needs to sit at that executive level in those institutions.
Vincent, did you have thoughts on this?
Yeah, and not contrary, but kind of another part of I guess the equation. This is sort of this, I wouldn't say it's anecdotal, but it's coming out of, if you go on to like a review site and you look at the negative reviews for a lender, they tend to sort of fall into two buckets from my observation. Someone gets, and this happens to brokers too, but just to use lenders to make the point, the customer gets upset when they get a no from their bank. We're not going to approve your loan. Or they get upset where they say they didn't take care of me. Usually it means that I was left on a terrible rate and I had to ask for a new rate, and why didn't they just come and offer that to me proactively? So I think that the challenge that you face as a lender is that there's two pretty negative moments, one at the point of approval and one at the, into the relationship at some point, which are both on the lender. And so the lender's ability to do the right thing by their customer, or to at least manage those moments better or more proactively, is part of what's generating that distinction between, well, the broker did great work, but the lender sort of dropped the ball. And I think, look, sure, the lenders can lean into this. So we're going to see lenders being more proactive with front foot, back foot pricing, for example, or helping their customers to understand, look, you can't be approved now, but here's what you would need to do that. I doubt it. I think that's going to take time. Some of the neos will go that way, but most of the majors will get there kicking and screaming, and only when market forces require them to. But in that, I think the opportunity sits with a broker as an advocate for the customer outside the lender to say, hey, the bank we put you with XYZ will not approve you right now, but these three things are the reasons why. And if we can change those things over the next 3 months, and my job is to help at least give you that information or coach you to that point, then we can land that. And by the same token, the customer who was put in a loan 2 years ago, well, does this obviously, we keep an eye on your loan and we can tell you they're not looking after you. So our first protocol is to make them look after you. If not, to say, let's put you somewhere else. So I think it's a problem on the lender, but an opportunity on the broker side, and one that benefits the customer ultimately.
Yeah, I really like that idea of being the advocate for a customer, because I think sometimes that's just what's needed. Customers don't always know what they need to be doing or the questions they need to be asking. And I think that's a nice way of putting it. Peter, did you have any thoughts on this topic?
Yeah, and I agree that that advocacy position on behalf of the customer plays out very, very importantly. As I'm challenged after these few years I've spent in the industry and cut my teeth in retail banking. Over that 4+ decades, the attitude really hasn't changed. That they all talk about customer service and customer experiences, but what's driving the marketplace and is the actual borrowers wanting a better deal. And the better deal might be simply, yes, the bank said they won't lower my rate, or they're causing me all sorts of grief because they won't get my direct debit sorted out, or whatever it may be. yet the broker is there as that advocate. So, well, look, this is happening there. That's not going to change, but here is, if you like, the next best option to assist you that's in your best interests in today's terminology. I kind of think we've unintentionally built that world where, in part, the home loan has become, from a regulatory and government point of view, almost commoditized. In that exit fees that were banned in the past are no longer in place these days. There is a strong encouragement that comes out from government for the ability for consumers to look into the marketplace and the opportunity to switch their loans. Obviously, it's the banks play hard in their advertising space, but as you see, again, Vincent mentioned 60 to 65% of people are using brokers to originate their mortgages. That's not by some random fluke. It is the service, it is the relationship, it is the ability of a professional. And that's not being derogatory towards the bank, but the bank can't tell you that the bank next door has got a better deal. Broker can. And so they can give you that broader spectrum of choice and understanding and a professional viewpoint of somebody who lives and breathes this every day to look after you, to get you what is suiting your needs, and needs change. And so that's why I say it's almost a little bit commoditized in its fluidity within the marketplace, but I don't think that's a bad thing either.
Yeah, I absolutely agree. And I think anything that helps look after the best interests of customers and make sure that they're with a product, that suits them, like you mentioned, Vincent, with that product that was a rate of 4 when they could really be on 2. It's not really fair for that customer just because their circumstances are a little bit complicated.
And that is an irony in the marketplace that unfortunately isn't new, and I wish it was new, that at times there are people that should be able to access a better rate, in Vincent's example, and they can't for reasons that are, that to me are not sound, because the industry may be having difficulty. If that person is fine and their employment's stable and there's nothing negative sitting in the background, why shouldn't they be able to access a better interest rate? They've already got the client, especially if it's the same lender, and their credit's good. We saw this in industries when the GFC started to hit, that lenders took a focus on a viewpoint on a certain industry, and anybody on that industry got played hardball with. And it's also a bit that happens in the arrears game. If somebody falls into arrears, usually they're struggling to make their payments. So why are you jacking up the rate so high? Surely this is the time to help, not to make life harder. So it's a bit of an irony in our sector, and I understand rate for risk and all that sort of stuff, but you say, so well, maybe these things should rationalise themselves better, and people who need the assistance should be getting it and not being penalised because of.
Yeah, I like your reference to, what's happened in the past as well, because I think it's hard to escape that, and it all, you can look to the past to see what else we can learn from that. And I think to wrap up this session, I'd love to just get comments from each of you about what you foresee the future of the broker industry to be looking like, and, that potential growth that you might be seeing as well. Vincent, I might start with you on that one.
Oh, okay. I was thinking that's probably going to be a large answer. I'm reminded of the kind of the maxim from Jeff Bezos around what doesn't change, and he sort of implores this idea that customers will always want choice, convenience, and price. And I think in a world where you're either playing in the manufacturing side or the distribution side, and brokers clearly in the distribution side, if you can support those three maxims, giving your customers convenience and choice and trying to get the best deal for them, obviously subject to what their actual product needs are, but it's taken as a given in that definition, then you're sailing with the wind as opposed to into the wind. I think that the challenges for what you would think of as traditional brokers is that there is going to be an emergence of money that is trying to manufacture money from a place that's cheaper and operate on cheaper margins, and will potentially look at the broker channel and go, this is an expensive channel. And but for all the arguments of, well, it's cheaper than having branches, absolutely. But it's not cheaper than using a comparison site in a lot of respects. And so we have to think, well, what's going to happen in the future, and what's going to happen when the large retailers and large platforms get into distribution of mortgages? What will that look like? And then what will happen when banks say, we don't need the brokers to do all this paperwork, we can let the customer do that directly. So I think if you think about those macros and where they're going, that the ultimate role of someone who is on the distribution side of the equation will be the advocacy and stewardship of the customer. And if you can do that in a way where you're also aligned to where the technology platforms that are evolving that the customers are using or part of, then I think that's where, you know, the role of the broker ultimately sits, and the industry will evolve to service customers in that way.
Great, thanks for that. Susan?
I'm going to follow on from what Vincent said, which is very much the fact that as long as the customer needs an advocate to help them with choice and to find that best product, I think that the broker will be there in best place to present that. And I understand that the technology will evolve and will probably start to deal very well with vanilla customers. But I think the reality is there are more and more sources of funds. The reality is that selection by a person that perhaps only gets a a couple of times in their life, it's actually going to be very, very complicated. So it's getting more and more complicated as much as it's supposed to be getting easier. So I think that the broker is there to help someone navigate who isn't an expert, navigate through that and help them find the right thing for them, because it is a little bit scary and it's very important. And it's important to remember that the consumer is not there to get a loan. The consumer is there to buy a house. That's actually really the reason why they're talking to their broker. They're not there to figure out how to get the best loan. That's just their stepping stone to get to their house. So if that broker is going to help them get through a complicated process to get them to achieve their goal, I believe that the use of brokers will expand. And I think the technology will be there to support the broker as well as the lender.
Yeah, fantastic. Thanks for that, Susan. And Peter, final comments?
Yeah, I agree that the whole piece around convenience and choice, stewardship of the customer, is what will continue the broker space forward. I very strongly believe that many brokers in our industry need to improve their digital strategies and prepare themselves for the next 5 to 10 years and what that looks like in that particular environment. And I am very bullishly supportive as where brokers are going with a best interest duty. I'm challenged with comparison sites in regards to that, but we'll leave that for another conversation. But I do believe, though, that as painful as some of what we go through regulatory-wise can be, I do believe the broker space has every capability and likely to achieve 70 to 80% of market origination over the coming 5 to 10 years, and follow some of the journeys as what happened in the United Kingdom, where they're up around 72% penetration. There's no reason why we can't achieve that here. And I think, again, that stewardship of the customer, ensuring they've got access to professional services, choice, and convenience of actually getting a home loan, that will keep the broker space very solid for a long time to come.
Great, thanks for that, Peter. And I think we've had some really good perspectives here from our 3 panelists. So I want to thank you all for your time today and for answering my questions and giving some really interesting insights into the broker industry as it stands today, and also what it will look like in the future. So thanks again for your time, and I hope everyone enjoys the rest of the conference.
Thank you.
Many thanks.